We have one final trade to get to today. Let's toss it over to Mike Patton, head trader at Thunder Trading. What's your pick, Mike?
Hey, everyone. Hey, Angie. My stock pick of the day is Dexcom. Symbol is DXCM as Mary. Dexcom Incorporated, they are a company in the medical equipment and supplies industry. They're based in San Diego. And this company's stock has been doing fairly well. It's not on a massive trend up, but I think right now it's at a good value point. Currently it's trading around $130 to $131 a share. And I think after this last earnings, which came out better than expected, this stock looks like it's poised for some upside. I do believe that the upside potential here could be anywhere from $149 to maybe as high as $170 a share. Some projections have it for much higher than that, based on its future growth potential, which seems to be much faster than what it's been over the last 5 years. So this looks like a pretty good runner, or potentially a good runner. Also, we're seeing good earnings growth on this stock, very consistent earnings growth, very consistent profit growth. So this looks really solid. But obviously, we have to talk about the downside potential. So if this stock is breaking down to where it's trading down to maybe about $120 a share, that's where I would conclude that probably my thesis is not correct, and we might not expect the stock to go up any farther.
The stock market has had quite a run. Of course, the Dow crossing 40,000 last week. Do you think the stock market rally might be losing some steam here?
Now, as far as the markets are concerned, the NASDAQ obviously continues to rally. The QQQ ETF just made a new all-time high. So congratulations to the markets on that. But here's the thing. When I'm looking at this rally, I don't see as much participation as far as volume as we saw previously. So I do believe the markets are still cautiously probing new highs. I don't think we're seeing a runaway bull rally yet. I do think there's a lot of economic data and considerations, but I do think the focus has now shifted in the market from whether or not we're going to get a rate hike to whether or not inflation is going to go up enough to give us, or whether or not we're going to get a rate cut, I meant to say, to whether or not inflation is possibly going to go up enough to justify a rate hike. So I think the markets right now are taking all their comfort in there's not going to be a rate hike, or they don't expect there to be a rate hike, where it used to be, seems like all the focus was on whether or not there was going to be a rate cut. So other than that, for the most part, most companies look like they're on solid footing. So I think that the prices that we're seeing now are not overbought by any standard. But at the same time, we do have to factor in that if the economy takes a really negative turn for whatever reason, then all these expectations of profits, et cetera, go out the door. But I do think that's one of the reasons why Dexcom is a good choice, because looking at the fact that it's in the medical industry, that's an industry that typically has resilience even when there's a recession.
Great trader talk. Thank you, Mike.
Thanks again. Have a good one.
Go to businessfirstam.com for where to see our show on TV.